Welcome back to the Dividend Diplomats YouTube channel, guys. Yes, you got your boys here. The L, the B, the B, the L, the D, guys. And today we're talking about one single stock that is actually getting hammered in 2023. Not hammered like Burt down in 12 natty daddies on a brown Sunday before and during the game. We're talking about hammered in stock price down over 46% this year. They've grown dividends for over 6 years straight.
Before we jump in, everybody, smash that subscribe button. Give this video a good old-fashioned thumbs up. Let's go, guys. Let's help us get to 19,000 subscribers. And Lanny, on one of the videos, somebody left a comment to bring back a Natty Daddy challenge of some sort. We're not doing it in this video.
No,
But
no.
stay tuned for what? Sunday's video? We will have a Natty Daddy challenge that we're going to announce. So make sure you chime in for Sunday. We'll put our heads together and we'll come up with something.
Can't wait.
It will get me. If you do it, I'll drink a Natty Daddy on camera once again if you hit the milestone we announced. But you'll have to subscribe and tune into our Sunday video.
All right, guys. We're talking about a stock that usually does very well during bad times. We're talking about a company that usually gets heavy foot traction during tight times. Delinquencies are at an all-time high. Credit card balances are also at an all-time high. Bert, we're talking about the $25 you spend. You can get $5 off coupon Dollar General. Ticker symbol is DG.
You have me stumped here. I thought for sure we were talking about a bank with that one, but Dollar General. I mean, look, when your budget gets squeezed, you have to look for value, and that's where Dollar General serves so many people. They have such a large footprint, and that's why it's such an interesting stock to analyze and can be considered recession-proof by some.
Yeah, so DG is down 46%, guys, and everybody here watching. They are down. They've had bad forecasts, bad guidance. Diluted EPS, they expect to be down 34 to 29%, year over year in that $7.10 to $7.60 range, which you'll see when we put them through the metrics. We use an EPS in that range.
Mm-hmm.
And then for like 2024, Bert, they actually have large plans to expand their real estate footprint, which I thought was very interesting.
Yeah, they're zagging, right? You're saying, hey, you're saying earnings aren't going as strong. Performance is terrible. Obviously, they're cutting down earnings, but they're still investing in the business too, and that is such a fascinating thing. What is it? What's the quote? We'll put the quote up here too, but I'll read it here. For the fiscal year 2024, company plans to execute approximately 2,385 real estate projects, including approximately 800 new store openings. That's insane. 800 new stores, but that's not it. It's 1,500 remodels and 85 store relocations. So they are investing heavily back into the business to help get the ship righted.
And keep in mind, Dollar General represents almost 4% of Realty Income's tenant portfolio.
That's
So this
right.
might
That's
dovetail
right.
to the big O.
That's right. But it's interesting. Read what's like. Just read the leaves here. They're not closing stores. You hear companies like Walgreens, on the other hand, ticker symbol WBA, they're going through a rough year, and they're focusing on store closures. They're focusing on like getting rid of the rent expense. Dollar General is saying, no, Chicos, we're going back into this sector. That's what Dollar General is saying.
So guys, we're gonna run them through, not the DG stock screener, but the
Oh,
DD, the Dividend Diplomats Dividend Stock Screener, guys, focused on the price to earnings ratio less than the S&P 500, dividend payout ratio, for it to be safe in our minds and our metrics below 60%, that history of growing dividends. And then we'll look at the dividend yield. And we've been comparing it to the 5-year yield on average to see if you're getting a little bit more value than you historically have been able to over the last 5 years. Bert, DG, bust this one out here. Start them up.
all right. The price as of December 7th, we're recording this one a little early ahead of when the video is being released. Price 132.30, earnings per share 745, P ratio of 1776. Birth year United States of America. Let's go.
Oh,
1776.
no.
USA.
Oh,
USA.
God,
USA.
yeah, the PE ratio for the S&P 500 is in between 23, 25 right now, so keep that in mind. So definitely showing a little bit of sign of undervaluation here, pricing in. Essentially, again, if you remember, $7.10 to $7.60 was what management said just a couple of, I think it was I think it was today. I think it announced today or yesterday.
Oh, did it?
So, yeah, so very, very, current news. Uh, yeah, yeah, December 7th, it hit the news wire today. So today it hit.
Yeah.
So and honestly, that's not even why we chose to
Yeah.
do the video on this today.
It just shows why we're looking at undervalued stocks all the time, where the metrics are. We're looking. We're looking, everybody.
Yeah,
We will not stop searching. But
right.
all right, their dividend history. 5-year dividend growth rate 15.55%, years increasing 6+ years. Very solid dividend growth rate.
Real solid growth rate. Obviously, they were ballooning that dividend up during COVID, some of their better years. 31% increase last year in 2022, but they fell from grace this year in 23 with only a 7.3% dividend increase going from 55 to 59. So they had a big streak of double digit increases and it finally put the brakes on that in 2023. I would expect something similar in the 5 to 7% range in 2024. But if they can come out of it and the economy starts roaring again, I would expect DG to also roar with it. So 6 years, 15.5% growth rate.
Beautiful. Their yield is 1.78% too, so just a hair above the S&P 500. Not bad, and that's well above their 5-year average yield, though. Their 5-year average yield is 0.95%, so it's what? Almost double? It's a little under double.
Almost double, 88% premium right now versus that 5-year average. You're getting 83 basis points above that 5-year average. So when you fall 46%, that's the value you get.
Yes, that's right. So to summarize, PE 1776, payout ratio 31.68%, 5-year growth rate 15.55%, history of increasing dividends 6 years, and a yield of 1.78%. Lanny, what are you thinking?
I guess that my question always is, what's the value proposition to the consumer? Like, do they fill a void? You know,
Mm-hmm.
you go to DG probably because you have a few bucks and you can get something, right? It's not like you can go into Target or Walmart and go, hey, I'm gonna only get half of this thing. You,
Yeah.
you can't buy partial products. Like you can buy partial shares through investing.
No, you're right, and that's a fair point to analyze. Like the one thing is they're in a lot of communities and they have a heavy real estate presence in a lot of places. Like we live in a large metropolitan area. How large of a metropolitan Cleveland is compared to others, different story. But to a lot of the places where Dollar General is, there aren't that many choices in the community either. So a lot of people view Dollar General differently when it's one of your main options, and that's where they tend to thrive. Those are the communities where Dollar General really excels.
Got it. And I mean, I've, I have family and friends
Mhm.
that I know make it almost a weekly trip to go
Yeah,
there. They'll load up on toilet paper and a bunch of products, paper towels, plates,
yeah.
a lot of little, items. So,
Cards, people like, get your cards there, all kinds of stuff. Yeah, there's a lot of great reasons.
I just don't, I'm not sure yet, $132 a
Right.
share, 17 PE. For me, I think it would have to be closer to that 2% yield,
Yeah.
get a little bit more yield for the risk of what more could come with how much they're doing in real estate. Because to build, usually you have to borrow, and you're still borrowing at higher rates. Yeah, it cost a lot. So I think I'd have to.
Yeah.
I'm gonna hold. I'm gonna watch, and
Yeah.
then I hate to always do that here on the channel lately, but I'm gonna watch DG, and if I see something, shake, a nice 10%, 10 to 15% correction.
Yeah, look, I know. I mean, it's not that we're being wishy-washy and we don't want to say we're either buying or we're not buying. Some stocks, you look and you're like, it's close, but it's not quite there. So you might as well keep watching. That's the point of doing this. It's not an immediate buy. It's what are we watching? What stocks do we want to follow, and what do we maybe want to buy? And it's okay sometimes if it's not a decisive yes or a decisive no. You can just sometimes say, I want to keep monitoring.
Right. What about you, Bert?
Gonna keep monitoring. But you know what? I mean, if it falls 10%, that's interesting. I do like that the payout ratio is so low. This tough year didn't just sneak up on Dollar General either. So what is important to me is they knew they were having a tough year. They're downgrading their earnings guidance, but they still announced a 7.27% dividend increase. They have that low payout ratio, so sure, the dividend might not be growing where it was on average, but it's not as if management stopped growing the dividend. So that's an interesting fact that that keeps drawing me closer to keep Dollar General on the watch list.
Let us know what you guys think of DG Dollar General. Do you guys see the worst is yet to come? Is there more bad news coming for Dollar General? Or do you think it's rightfully valued and you've been buying this stock? Let us know below, guys. If you haven't, definitely subscribe to this channel. Like this video. Keep saving, keep investing. Let's all get to financial freedom together. Let's do it. Come on.
We forgot to tell everyone something, Lanny.
Man, you guys are either with us or you're against us, Jack. That was Bert, the Hurt, and Lanny from the Dividend Diplomats. Over and out.